Well, the bulls are back on the Dalal Street, and how? 9 straight sessions of gains. But will the rally sustain after the long weekend? Well, in fact, the Nifty has actually seen a 1,000-point bounce in the last 15 odd trading sessions. That's up by nearly 6 odd %. For the Bank Nifty, it has been a 3,000-point jump in the last 17 sessions. That means it has risen by 7.6 odd %. Now, the broader markets, when you talk about, have also done quite well. If you talk about the last 9 trading sessions, when we've seen consecutive move on the upside for the markets, the Midcap 100 Index has actually rallied over 5%, while the Smallcap Index has rallied by 7.3%. Now, it's quite remarkable that both the Nifty and the Bank Nifty remain just about 6% and 5% away from the respective all-time high levels. Now, this distance for the Midcap and the Smallcap indices to reach their all-time high levels, however, is still quite more. When you talk about the Midcap Index, that needs to travel another 8% to really reach its all-time high levels. On the contrary, when you talk about the Smallcap 100 Index, that needs to cover another 29% really to reach its all-time high levels. That means in this recent run-up of the markets, it has been the small caps that have underperformed all the major indices in that respect. But is the journey to retest the record levels and therefore move beyond that going to be easy? Well, there are going to be many factors that you need to consider here. First is the earnings. Now, remember the IT's earnings season has kick-started with TCS and Infosys reporting their results first. Both their results show that there could be some more speed bumps right here because both of their numbers have actually disappointed the street. Now, remember that after the Q3 numbers, we saw the earnings estimates for FY24 being cut for a wide swath of companies as well. Hopefully, Q4 will be better, both in terms of the reported numbers and also the management commentary as well. The second issue is the global picture. Now, the view is also quite divided here. There is one camp that actually believes that the US Fed will see details of the March inflation data as showing no sign that the underlying inflationary pressures are easing, and therefore it would keep hiking the rates in the month of May and beyond meetings as well. Now, the other camp really believes that a pause is definitely coming after the last hike that was seen in the month below as well. Now, when we talk about the next month meeting, that is the last hike that one could expect from the US Fed. Now, while the market may be pricing in this Fed rate cut later on in the year, after this last rate hike that is done, and then therefore a prolonged pause, but later in the year there is a wide expectation that the Fed will move to reverse the rate cycle. It definitely needs to be seen that if these things really play out as expected. Now, in any case, many experts also believe that the rates will be held at these high levels for a few more quarters before the rate cycle is reversed. Now, when we talk about the mark or the levels at which the Nifty will be moving to going forward from here, remember the psychological mark of 18,000. That is likely to be tested in the coming sessions in the next week as well. If the index manages to continue to move at this pace or continue to hold above the 17,700 levels that it touched in this previous week, with the momentum indicator, the RSI, the relative strength index also showing some kind of a positive crossover. Now, experts also believe the crucial support for the Nifty will definitely remain at 17,500. So, this is the broad range where you need to watch out for. 17,500 for the downside, 17,700 to be protected on the upside, and then therefore if that sustains on the above, 18,000 levels can definitely be retested in the coming weeks.
If you like the video, do like, comment, share and subscribe.